Okay, so this is day 2 of mentorship for June, and we will be speaking about market structure. Okay, market structure, which is something that most people who only focus on ICT only tend to look over. All right, so when we look at market structure, everyone knows that. Obviously, obviously everyone knows the basics: the higher highs and the lower lows, right? Higher highs, higher lows; lower highs, lower lows. Okay. Now there is a very how can I put this? There is a very big difference, like we speak about in our balance price range theory. There's a very big difference in terms of a strong break and a weak break, right? And you can see that difference right over here. This over here is a strong break, breaking this, reacting from this and going higher. And these over here are very weak breaks. Okay, apart from the last one, very weak break. So when you see a weak break, we can see that price more or less comes back into the range, reacts from near the point of origin, and then goes lower. Okay, it's applicable to the other side as well. Now there is something, right, which most people call strong high, strong low, weak low, weak high. Okay, weak low, weak high. Now obviously now you guys know, obviously we are the earlier recordings that we have on the Telegram group, we know that we have just a break in market structure, right? So we have something like this, and we have something like this, right, coming back inside the range, and one that stays outside of the range. Same thing is applied to the other side, right? Same thing is applied to the other side, where we have this, and we have this. All right, so now keeping with what we learned yesterday, okay, keeping with what we learned yesterday, there is a certain uh, thing that happens, right, prior to these big expansions, and we all know it by now. There is a formation of a swing high, swing low, swing low, swing high. If there is no swing formed, right, no obvious swing formed, then market will more or less stay in a consolidation. Okay, more or less stay in a consolidation. Now can we see this? Can we see this on maybe a chart? Let's have a look. Let's go Bitcoin 4 hour. Okay, so now Bitcoin 4 hour, you can see that over here, this, if you just zoom out, right? If we zoom out over here, you can see that, okay, we have 1, 2, 3. After the third one, we should see expansion, right? We got it. Then we have 1, 2, 3. After this, we should see expansion, right? We got it. Then we have 1, 2, 3. Expansion? Yes. Okay, yes. So if it should follow through, then we should see price coming here and then go lower. Okay, so now this is all on a fractal basis, on a like on only that specific portion of price action, right? But now if you just zoom out and see, we have this one, high, 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 high. Okay, we have that. Now, do we have anything obvious to give us a swing high formation? No, right? We don't have. But then if you look at something like this, let's say we have this one, swing high, correct. You see price came down, but did it stop here? No, it didn't, right? So it's not that valid. Now, how to know whether it's valid or not, right? How to know whether it's valid or not? So now we are looking at market structure. Now, when we look at market structure, I just said when you see a break in market structure and when you see price returning back into the range, like this one, remember all these All those days ago, I had this low highlighted saying this is a weak low, so price should go below it. And you see price came below it. That's perfect, right? It came below it perfectly and then it reversed, yet to come here. Okay, yet to come over here. But apart from that, you see it broke market structure, immediately returned back in the range. Right, immediately returned back in the range. Um, then when it returns back into the range, we know that price is gonna go back near the origin point. So what do we have near the origin point? Last buy side delivery. So we have BPR plus liquidity void plus bearish order block. So so many things to point to the downside, and you can see it followed through. And yesterday also when we spoke about it, I said we should see price falling through down if order flow is correct. Okay, so we have that going as well. So anyways, apart from that, we have the break in market structure, return to range, and price goes down. So when you see something like this is when you should understand that okay, price did not break through and go lower. Instead, price went higher. So if price is going to go higher, then we know that price is going to disregard this part here and go deeper into the entire range. And we said that we are also looking at discount premium concepts. So it will not make sense for price to stop at discount over here and go lower, right? So it needs to go to premium. So here's your premium section right here. Okay. So that's why. So that's how we know that this swing high will not work out. Then again we have this one as one high, another high, another high. Do we have any formation? No. But can we see something here though? We have uh, we have this, and this is a potential fellow to completely cancel out the downside target and start going higher. Okay, but it's the possibility is there. Okay, the possibility is there, mainly because it's starting to show signs of a swing low forming. Okay, but until it actually breaks above, we can't be certain because everything is pointing to the downside, especially order flow and especially market structure. Okay, so to confirm this downside move, we need price to take out this low, take out all liquidity over here. So we understand that when price came and just came and dipped below this low, we understand that the order size coming in over here is almost equivalent to the order size resting over here, right? So 1 million coming down is equal to the 1 million resting over here. So net zero, right? And then of course new orders came in here, causing price to go high. Okay, so that's pretty much it regarding that. So we know now the importance of the institutional swing points. We know the importance of market structure, and I'm just going to keep it very, very, very simple. As today's session may be short, so I'll keep it very simple. Uh, always look at the major swings for market structural break, right? And if you want to look at the smaller ones, like for example this one, this one, this one, you can do so. You may do so. But then if you're going to trade them, you better trade them on the 15-minute or lower. Okay, 15-minute or lower. So you have, for example, something like this, right? So you have, okay, here, you have low, break, right? Break. And now you see, right? You have a break and price goes up and comes down. So you see this over here was point number one, point number two, point number three, and boom, goes up. Okay. Now, of course, when we look at live conditions, or we are going to be like every single damn thing that we see is something that we might think would go up or down, right? So that's the hard part of it when it comes to live trading. Okay, so the only way you can filter that out. Okay, so I mean, we all may have trouble with it once in a while. Even I have trouble with it once in a while, but the only way we can filter that out is by actually waiting for this break. All right, we wait for the break, and then we see all of these stuff happening, and then when we get the break, right, we know that we are supposed to get that third formation, right? the third formation. We know that. So in getting that third formation, we need to see, okay, this is a 15-minute chart. So if you look at the 5-minute chart, right? So if I just press the replay tool, come all the way here to avoid scrolling back. Hold up. Okay, so it seems like the replay tool isn't working for me. I don't know why. Give me a second. Okay, 5 minutes. I believe this is a spot. Let's come back over here. Okay, now look at the 5 minute. Now in the 5 minute, we see the big move down, right? We see the big move down. Now, in order for us to actually believe that when it goes up, it should come back here and then go higher. Then what needs to happen is we need to see price jumping all the way up there, right? You see price jumping all the way up there. So now, in looking at this institutional swing low form here, we need to see either something happening here or something happening here, right? So now see, now we have to wait for the break. Let's wait for the break. Did it break? Yes, it did. Now let's see if it goes up or closes back in. Okay, finished. So you see this, the moment you see this close back in, right, you cannot assume that this is done. It's not done. But now we understand that it closes back in, right? We understand that it closes back in. We need to see price come back all the way down. Why? Because we need to apply premium discount concepts, right? So we need to apply premium discount from this one to this one. Closing out of that range is fine, but in order for it to be a clean, balanced price range entry, we need to see price going up first and then come down. Okay. Yeah. All right. So that was that. All right. So now we see that we need to see price reacting somewhere here, somewhere here. Okay. So now over here on the 5-minute chart, what can you see? You can see low, lower low, clean break. Right now see this is the one. Yeah. See, clean break. Did it close back inside this range? No. Instead it went higher. So then when price comes back down, right? When price comes back down into the discount portion of this range, we should see price reacting within this region. So ideally over here, right? Ideally over here or over here. But let's see. So let me just draw it. Okay, now let's see if price actually reacts. There you go. Okay, so this is the reaction that you get. Okay, comes back to discount, reacts. Now of course later on, remember after that challenge I gave you all, once you finish your 5 hour plus daily and keeping it above 10 hour at the end of the week, you will get to know how to trade the pullback, how to trade the expansion, how to trade the pullback, how to trade every pullback and expansion within a session or within a day. Okay, so trades can vary from 3 hour to 10 hour to 30 hour. Depends. Maybe the accumulated portion will be 30 hour, but within a day you can get something within this and this within multiple trades. Okay, so which is why I want you to first condition yourself, and then I will show you guys to do this. I don't do it because it messes with my psychology as well sometimes, and also it will mess yours also when you learn it. So it's something that you use, sometimes, not all the time. Okay, so that's that, right? So we understand now we have the break in market structure comes down. Where exactly would you end this trade? Would you put a limit order? Okay, let's go back. I did not look at where it reacted from. Okay, where's my drawings? Damn it. Okay, here it is. Right, so now still yet to come down, right? So we have this. Okay, we have this. You see price over here, right? Price over here. We have swing high, and then we are from yesterday what we studied. We know that this is a breaker. Okay, breaker, and inside the breaker, what do we have? Clean order block. Now, is it a clean order block? Yeah, it's a clean order block, right? Clean order block because price did not come back into it. So that's going to be where my the refined portion of my trade will be. So let's see. Keep it over here. Stop loss below here, and take profit. Let's say at this high. Yeah. So this is basically how I would have done it. Okay. So looking at this closely, if we look at where price reacted from here, so redelivered rebalance. Then if you look at the 1 minute chart, if you look at the 1 minute chart right over here, it reacted somewhere here, right? Reacted somewhere here. So we have rejection block. And why rejection block? Because you can see price went up, came back down into the body, came back down into the body. So then refining it down to the 1 minute chart, you know what you can do? Refine it here, here, right? Then there. And then if you then put this here, right here, and then if you move your stop loss a bit lower like this, right, and then if you see how it reacts, it should be a bit more precise. Yeah, there you go, there you go, to the point. But in reality it would not have triggered you because Bitcoin spreads are quite big, so you have to move it up a bit. Okay, so you need to look at your spreads as well. If you have a spread, then you add the spread and you move it up. Okay, that's pretty much it, no problem. Okay, so that's basically how you work with market structure using order flow and all of that, right? That's basically how you do it. And now, if you want to look at, what you call mm, balance price ranges, right? So now this is a scenario. This here is a scenario where price will stop here. Okay, here, mainly because uh, you see this big move, right? Big move. So when price comes back down, you see we have independent ranges, right? We have independent range 1, independent range 2, independent range 3, and we have independent range number 4. Okay, number 4. And inside this independent range, right, all the premium discount concepts will not apply now, mainly because you have this low, price goes higher. What is then this entire part from here down to here. I'm sorry, from here down to here, up to here is your breaker, right? Your breaker. So the entire up close candle, right? So we go here, here, your breaker. So inside your breaker, what do you have? You have the mean threshold, right? The mean threshold. So price will most likely stay within this range only if it were to work. So what's inside this range? You have balance price range from here to here, balance price range, right? So then you have this entire portion to work with. So this is where I entered the trade earlier, and I did it in front of Mr. Theo, right? Is Mr. Theo here? Yeah, he's here. Theodore Kidson. I did it in front of him, and I executed in front of him. We had consultation, so he saw me buying over here, and it worked out. Okay, so yeah, so that was it. So basically, that's how you can look at balance price ranges and all of that. And of course, the way that you get the reaction, right, on the different time frames also varies, right? Just because you saw Just because you see it happen a certain way on the 5 minute doesn't mean that it's going to happen the same way on the 1 minute, right? There's going to be subtle changes, but the result will be same. The result will be the same at the end of the day. Okay, so it will definitely be something like that, or it will be something like that. Okay, either way, everything over here has something to the left, right? Like that, like that. So one, two, three. One, two, three. Okay, simple as that. So one, two, three. There you go. And every trade that we take is like that, right? Every trade that we take is like that. We have one, two, three. Now, why did this not work out? This did not work out because PD array higher. Uh, then we have. Let's see if we can find more examples. We have what I just showed you. Okay. Now, if I zoom out, you can see something. You can see one, two, three, right? Three. So your break in market structure here, with that break in market structure, premium discount, what do we have? Premium. What happens inside premium? It looks like a balanced price range, right? Over here and somewhere here actually. Yeah. So we have reaction there, and that's your short position to go all the way down. Right? That's your short position to go all the way down. So you see, whenever price closes back inside, right? Whenever we break market structure, whenever price closes back inside, you can see that it more or less goes to the premium or discount region. Okay, and using these concepts now, yesterday I gave you the tools. You can create your own scalping model if you want. And the reason I call it a scalping model is because when you understand these concepts, you can either take the buy over here to go into premium, and then what you can do is you can take the sell over here. You can take the sell over here to go down. So you have one trade to go up, two trade to go down, and three trade to go back up. So you have a constant cycle of buying, selling, buying, selling, buying, selling, right? And this is and I'm going to say this on record. This is what WWA is charging for. Basically, teaching people, right? Teaching people to basically teaching them to what's that word? Teaching them to refine their 1 minute order blocks and using uh, news events, right? News events as a cycle, sort of a cycle, right? But the way they use news events and the way we use news events are different. Okay, they use the actual time, the actual release date of that news, not release date, release time, the releasing time of that news. Right? But we use 30 minutes prior, right? Because that gives us more space to see what price is doing, to see what price is doing, right? So they charge 2k 2k or 3k plus to teach ICT time of day. So London Open, New York Open of day. Then they teach 1 minute OBs, 15 minute, 5 minute, 1 minute structure, timing of news, and I believe that's pretty much it. So they use time of day, 1 minute order blocks, 15 minute, 5 minute, 1 minute structure, timing of news, 10 to 20 pip targets, 1 to 2 pip stop loss. Okay, this is what they charge 2k plus for. They charge 2k plus for existing information that anyone who puts the chart time can figure out, right? So I mean, yeah, that's pretty much it. So that's basically what they uh, why they were so overpriced, right? This is why they're so overpriced. So Yeah, so if you put in the work, you can figure this out by yourself, right? So, but I'll give you guys all the details soon, right? So I don't overcharge. I just make sure that you have the right mindset before you get into doing this, because I'm pretty sure if someone without experience learns this, they're going to think that every move is a move. Okay, they're going to think that every move is a move, and they would definitely lose money, because if they learn something, right, and if they did not see this level here, they would sell here, what try to see it go lower only to get stopped out here. Okay, so stuff like that can happen. Okay, but I digress. So we know now, we spoke about market structure, higher highs, higher lows, lower highs, lower lows. And we spoke about institutional swing points and how you can enter them, breakers, balance price ranges, which will also be covered tomorrow. Okay, should also be covered tomorrow. So does anyone have any questions? Just put it on the chat box. Let me see what else Bitcoin has in store for us. So if you don't have any questions, just say no. And we can speak about something else. Or if anyone's confused about something, you can ask so we can keep it on record. Right, so just put it now and let's see. The price breaks market structure uh, and doesn't come back, continues and breaks another market structure. Does it mean it probably won't come back to the initial range? Now that happens. That happens only when you have red news. You saw like yesterday on Euro USD. Yeah, that's not how you spell news. Okay. Yesterday, how we saw it in Euro USD, right? You go to Euro USD. You can see, zoom out. You can see that it's been taken our market structure here. Yeah, basically took our market structure and just kept on going down. But that's because when you have red news events, right, price tends to make these exaggerated moves. And since there was literally no other form of market structure here because it's liquidity void, the next thing that the price engine looked at was this one, which is why price came all the way down at once, right? But if there was like multiple lows, so let's find a scenario when we had multiple lows. Euro USD literally has no scenario like that. Okay, so multiple highs, multiple lows, right? You can see that it should be more apparent on the lower time frame, but let's just work with what we have. We have highs, price takes it out, comes back down, right? Then we have a high again, and multiple highs over here. So price takes one out, comes back down, takes another one up, comes back down. That's something like that. So when you have multiple highs, highs, highs like that, right? And then when you have red news events, red news events tends to basically move price in one direction, taking out the intermediate term high. Okay, we have this high also, moves up in one direction, taking this high. And then we have red news event uh, on Friday. So we had, this is your uh, low, this is your low. So it came down, took this guy out, and it stopped for a bit and then dropped more. Why? That's because you had red news event over here during London, and after London, price dropped with response to that news event. And then we have another news event during New York session, the red news event. And in response to that, price came down to take out this low as well. Okay. So if there was no other news event during New York, then price would have just basically come down here, and from around over here, price would have just stopped for the weekend. Because we had that other news event, we dropped further down. There you go, right? Drop further down. and this is something that we'll check tomorrow also. But looking at this now, we should be seeing price uh, react for a bit and either react over here or somewhere over here next week, and then continue its move down. But we'll double confirm that tomorrow, because I'm just saying it. Yeah, just by looking at it, right? So we'll speak about that tomorrow. Then can you show examples of rejection blocks? Rejection blocks. Okay. Let's go to the 5-minute. Okay, so now rejection block, right? What you need to understand is a rejection block is highly probable, right? Highly probable when the order block has already been mitigated. Okay, rejection block is when basically an order block has already been mitigated, and so basically it should also graphically look like either like this, or of course this is a bearish candle, bullish candle. All right, so it should look something like this, right? With this big wick over here, and these wicks tend to go into PD arrays. All right, PD arrays. And then prices goes up, and later on what it will do is it will do something like that. Okay, do something like that. So essentially what's happening is this will come down and obviously do something like that, and then go higher, forming what? Forming a swing point, your entry, and price going higher, right? So this is basically it. Now here's the thing. Okay, here's the thing. When you look at all of ICT's models, so-called models, right? No, I mean, I'm not shitting on him or anything. I'm just saying uh, all of his models, you have the market maker buy model and you have the market maker sell model, right? What do they look like? That's the question. What do they look like? When you look at the market maker buy model, is this a market maker buy model? Someone confirm, please. Yes or no? Anyone want to confirm, please? This is the market maker buy model. Yeah. Okay, now see, right? If you look at the market maker buy model, we have this. So what is that? Institutional swing point. So if you understand institutional swing points, swing high, and the expansion from it is a selling program until what? Until a low has been taken, right? So what is the market maker buy model imply? Buy program until a high has been taken, right? So it's just a fancy word for a swing low forming. Now yesterday I broke it down for you. I broke it down and said swing low forms like this, and the expansion happens after this. The full expansion, I mean, right? So here it is. Then next one, market maker sell model. You have this is the market maker sell model. So then what? We have 1, 2, 3. Done. A market maker sell model is it's essentially a swing high. We are anticipating a swing high forming after the peak high reacting or touching a PD array. Okay, the peak high is touching the touching a PD array, causing the reaction. That is an institutional swing high. Market maker buy model is just the formation of an entire range. Okay, that's why basically you can capture the entire range, because we are taking part in the initial phases of the swing, basically the entire range forming, right? Basically we are anticipating that okay, once the swing low has been formed and this is the high, then we are just going to see continuous price movement until the high is taken out, right? And it's most of the time it's a consolidation, right? That price takes out. So that's for a reason, and we know that it's because of the open float built up and down, but predominantly to the upside, because the downside has been taken out anyway, right? So now we know that market maker sell models and market maker buy model is actually uh, fancy name for the expansion it's a fancy name for the expansion from the last point of the formation of a swing high and swing low. Then how do we enter on a market maker buy model, market maker sell model? Simple, right? If you know that the buy model starts like this, what is this? Breaker. And if it goes up nicely enough, it becomes the balanced price range, and price goes higher, starting the entire for a buy program, right? Starting the buy program, which is why I always ask you guys, whenever you look at the chart, see where is it coming from. If you see where it's coming from, then you know that okay, has the swing high, swing low been formed already? If it has not been formed already, then prepare for price to make that form, right? Make that form at that particular point. So we know that it's a buy program. Then you have uh, this break here. So breaker, sell program, right? Sell program. So here you go. This is exactly what the market maker buy model and sell model is. Now, if I show it to you on Euro USD, okay, so do it on the 4 hour. See if it's visible on the 4 hour. Okay, what is this? This is the daily rejection block we spoke about weeks ago, right? So price reacted from that. So you can see that we have 1, 2, break in market structure, done. So after the break in market structure, can we expect up move? Yes. Why? To finish the swing high formation near the origin point. Now, why near the origin point? Because broke market structure, immediately return back inside the range. So we want to see a sell up here. So there's nothing here. There is something over here on the lower time frame, right? So lower time frame, there's something over here. Price reacted. Then we understand that okay, swing high formation complete. 1, 2, 3. We get in over here. We get in somewhere here. Get in somewhere here also, because it's possible, and enjoy the move down. Now where? The problem is where we enjoy the move down to take out the low. Can be this low, can be this low, and done. We take out a low, an obvious low. So obvious low in this case is this one. Okay. And we all know now, after yesterday's topics, once a low has been taken out, which is external range liquidity, it goes back for internal range liquidity, right? If it goes back for internal range liquidity, where will it go to? Here. Here's your rejection block. Right? You asked me for a rejection block. Here it is. Now, why this one? Because you can see that price broke down. Once it broke down here, it wicked up, right? it wicked up. So it wicked up, essentially coming back into this bearish order block and also coming slightly into this bearish order block. So which makes these bearish order blocks invalid. So once it becomes invalid, going via the what do you call the PDRA matrix, after an order block we have rejection block. Here it is, and price follows through. Okay, so that is basically it about swing highs. So if you always if you zoom out, is there a way to confirm this swing formation using dollar index? Dollar index. Yes, there is a way. As always, by looking at the points of interest on the dollar index. When you see the points of interest, for example, this one. So this one happened during 9th of June. Yeah, 9th of, is it 9th? Yeah, 9th of June. So look at Euro USD 9th of June. We have this. So when we see that reaction, now obviously when we look at Euro US, when we look at the pair that we are trading, right, we know we have so many things going on, right? But then when we look at a pair that we are not trading, like dollar index, it's much more clear for us. We can say, okay, it's over here, so I should be looking for this in Euro USD. So when you see this happening, dipping into this 4 hour, right? Yeah, 4 hour bullish order block, you should be like, okay, now I should see a swing high form on Euro USD. So I go to Euro USD and I'm looking for a swing high at this particular point of time. Can I see a swing high at this? Let's go back to June 9th. Here. Can I see a swing high over here yet? No, right? I only have number one, number two. So I need to wait for something like this, right? The last part of the swing high. So let's wait and see. Okay, we got the break in market structure. Now we need to see a return back up. We very want to see the return back up to this bearish order block. And there you go. Okay, there you go. So this happening, price going down, you have one trade back down here. You have upon break over here and not break over there. Upon break over here, you have another trade to go up, and when it comes back up, you have another trade to go down. So you have big trades like this. So when you look at the swing high formations on um, the high time frames, then you can take part in the short term moves to capture the weekly expansion. But I don't have that much of patience. I do it on the lower time frame. Okay, and in fact, teaching it again, or this not teaching it, more of a discussion. We having it, as a topic of discussion again. It's also clearing it up for me as well as a refresher. Is that how you do 30 hour daily on a lower time frame? Yes, 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 yes. But it's in you need to combine that with N30. I say return immediately in the range, meaning something like this. So now, if you saw the example earlier, let's go back to Bitcoin. Is Bitcoin falling again? Let's come back to Bitcoin, and if you see, right, I ask you to look at the independent ranges, right? So we have this range here, this range here, this range here. You see, at the end of the move, right, before it starts coming back down, then have a look at what range price broke. If you look at this over here, we can see that price broke this range, right? Price broke this range, and now relative to this range, right? Relative to this range here, this entire thing, right? What looks to be something that looks like a clean balanced price range, right? And again remember, right, I said a balanced price range, right, it's highly probable when it occurs on a swing high, swing low. So what can you see? One, two, three. I draw that properly. Here it is, right? Here it is. Highly probable when it happens on a swing high. Here it is. Okay, so that's exactly it. So then when you see, then if you see something like what I showed earlier, this one over here, right? You have break, and now you see with this break, it broke that also, correct? And then price, what does it do? It just drops back inside. Now, is there a proper swing high formation? Swing high formation here? No. Is there a proper swing high formation here? No. Why? Because we only have one. We don't have the other two sides, right? So that's not a good. So that's not a good candidate for a balanced price range. You may get this reaction, but it's going to be fake. Okay, I learned that the hard way. It's going to be fake. So then what? Then what's next? We look at clean order blocks, and that's the way to go. Okay, so always remember, and again I'll repeat this tomorrow as well. So balanced price ranges are nicely uh, usable when you have swing highs and swing lows that support it. Okay. Okay, any more questions? So let me know, yeah, if you have any more questions so we can go through it. Or if you don't have any questions, just say no. You good? All right. I mean, if you have any other questions regarding anything else, also let me know. One more example of market maker buy model. Okay, buy model would be here. This one. So you have, I showed you on the 5 minute chart because this is a bit too much. Uh, you have this reaction was at 1 hour order block. So you have 1, 2, 3. Okay, and price comes back to balanced price range right here. Balanced price range, also a breaker. Okay, so breaker is used to define the general area, and order blocks, fair value gap, balance price ranges are used to refine the uh, uh, entry point. Okay, I see another question. Give me a second. We use H4 breakoff structure for the weekly expansion. I use H4 breakoff structure to uh, go for contrarian trades, because if there's an H4 breakoff structure, it's more or less going to be either something like that. Sorry, something like this, which will basically start a selling program, or it will be something like already here, this one here, break over here, in order to do a contrarian trade or counter trend trade just to complete a swing high. Okay, so essentially getting a move where the 4 hour peak high has actually touched a PD array, right? That is something that I would use for capturing the weekly expansion. But I don't use the weekly expansion, a lot. Only sometimes when I feel like it. But yeah, if I were to do it, I'll do it based on that. H4 and daily as well. Okay. Damn, I was looking for a buy. I probably missed it. Yeah, so I'll post a recording after we're done. Yeah, breaker blocks, order blocks, etc. That quick. Yes, you need to study that. So that's the work that you have to put in from your side. But with time, you'll get it. Right. So with time, you shall get it. Okay. So is everyone else okay? Oh wait, can you explain your weekly targets? Rejection block always have to have long way. No, even the next week can have a longer candle. That doesn't matter. As long as it, shows a clear rejection from that PDRA, like a big rejection. Can you explain your weekly targets? In the sense, what do you mean by weekly targets? You mean the highs and lows that I would target for a week? That would be based on whether I am bullish or bearish. If I'm bullish, I'll target the H4 high. If I'm bearish, I'll target the H4 low. So meaning the most immediate obvious target. Okay, the most immediate obvious target. Am I right in thinking London makes the high low of the day? Sometimes, not all the time, but most of the time it does. Sometimes it doesn't, right? And that's because of the current order flow that it's following. Like if you're already in a buy program, right? Uh, it will most likely not go all the way down here and then do that again, right? So it's only depending on the circumstances, right? But once everyone does their little challenge thing, right? And once they are done with it, then you will see exactly when it will make that spike up or down, forming the high of the day or low of the day, and when it won't, right? So that's dependent again on everyone staying above 10 hour at the end of the week for 2 weeks. Okay. So for now, just trade what you see. Use everything you know. Trade what you see. Don't think. Okay. Now, so now here's the thing. Most people, what they do is they uh, try to do this. They think that okay, I see prices doing something. Okay. Let's say we assume that a swing high is going to be formed, right? And then they're like, okay, I assume that it's going to go up here and then it's going to go down. But it won't happen like that. It needs to break market structure first, then go up and come down, right? So when you assume as it's happening, like let's say price is over here, as it's happening, you keep your buy limit over here, stop loss here, take profit here. Price comes down, takes you, and then just goes through you, and it goes up, right? Don't trade what you expect to happen, right? Trade what you can see right now, which is why we wait for the balance price range, which is why we wait for breakers and all of that, right? People who keep their buy limits exactly on the spot, okay, and sure anyone can do that if you can exactly pinpoint the exact spot, okay. But at the same time, whether it's a clean bearish or bullish order block, whether it's a clean rejection block, right? We don't know because we don't have investment bank level, central bank level data feeds where we have the depth of market, right? In the sense that we don't know at what price how much money is offered. Like if for example right now 30 at 36,000 for the price of 36,000, how many people in terms of a dollar value, right, in terms of what is coming in the market, how many of them are actually willing to buy at that spot? If there are so many people that's willing to buy at this spot, price will now immediately expand. Okay, so the reason that we don't buy over here, right? I mean, I could be wrong on this trade. I'm just practicing now. So the reason that one could be wrong over here, right, is because there is nothing over here supporting this. From what we can see that this point over here is what caused the shift in momentum, right? Or over here we saw price coming down, and then over here we saw a quick shift in momentum, immediate move up, liquidity void, right? So this is a shift in momentum. So shift in momentum also indicates a shift in order flow. Okay, it also indicates a shift in order flow. So some people can keep their limit orders and say, oh yeah, zero drawdown, blah 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 blah. Okay, but in reality, some cases, yes, through experience you can. Some cases it's luck. Okay, some cases it's luck. Why did it go for rejection block while it was clean order block? I I would say that it's because it's a high time frame thing here. This one, right? This from this part, right? This part, right? Oh, okay. So again, when you go like only okay again, right? Let's clarify this, right, for everyone. And am I still on record? Yeah, I am. Okay. Been caught out a few times this week with BPR. Can you show some of the return to origin and others that returned last year side? I'll do that tomorrow in detail, right? Because if you've been missing out, then there's some things that have been missing, right, in the understanding of things. So I will go through this in detail tomorrow, right? For now, just go through yesterday's stuff, today's stuff, right? Have everything in order, right? Because obviously, as we go through the week, when price action does when price action does stuff that we did not expect, we tend to doubt what we already know. Oh no, it was supposed to do this. Oh no, it was supposed to do that, right? And then we get caught off guard. When we get caught off guard, we start questioning, oh shit, am I doing this right? Right? No, you are doing it right. Just take a step back. Take a step back, look at your charts again, uh, see, look at it through hindsight and see, okay, if I knew exactly what I was doing, if I was acting like knowing the correct order flow, knowing the correct bias in the marketplace, this is how I would have done it. And so when you do that, then you will never make that same mistake again. Okay, I won't say never. You will make it again, but at least the next time you won't make that mistake again. Okay, so that's why, right? So uh, whenever you start looking at 1 minute, you start questioning yourself. Why this? Why that? Right? So you always start off from 15-minute or above, right? 15-minute or above. And I would say if you are like me, who only look for 10 to 15, 10, 20 pips a day, 15-minute to 1 minute is enough. Okay, because on the from a bigger picture, right? From a bigger picture of things, 15, 10 to 20 pips, right? Is basically from this big range, it's only this small part, right? So what does that say? These small parts. What does that say? It's just volatility, right? It's just volatility. As much as I hate to say it, I am a scalper. Okay, in a way. But when you reach this point, you are a day trader. Okay, but ICT classifies scalping and day trading as under the same category, right? So, but because I stick to this and rarely go to this, I call myself a scalper. And so we are basically trading the intraday volatility. Most of us, right? We are trading intraday volatility, and this is sound for intraday volatility only. Because from the again, like I said, from the bigger picture of things, why am I deleting this? Okay, from the bigger picture of things, these moves are only basically these small blocks of price action. Because sometimes you may not notice it, or maybe you do, once your trade hits take profit, right? What happens now? Let's say you buy. Okay, for example, uh, let's say you buy here, take profit here, 10 pips, right? Okay, hits your take profit, comes down a bit, and then boom, goes higher, right? Why? Because we are only taking part in the small piece of the volatility. Okay, we are taking part in a small piece of the volatility, and that is enough. That is enough. Main reason I'm saying that's enough is because these are the most easiest targets. Easiest targets. Most of us, depending on your the level of your patience, we are patient enough for 10 pips, not 10 pips. Let's say 10 between having the patience for 30 minutes to 1 hour, looking at the charts, looking at your trade. After that, after this 1 hour passes, you're thinking to yourself, oh my god, no, this trade is taking too long. Do I add another position? Do I close this? Do I take partial? Do I do this? Do I do that? Only if your targets are quite far away. But if it's close by, like mine, between 10 and 20 pips, it happens in like 30 minutes, sometimes even 5 minutes, right? So that, for me, that's enough, because 10 pips, right? If you put it into perspective, right? If you have one lot size of one is $10 per pip, right? $10 per pip. So 10 into 10. Oh, someone clarified for me. One lot is I forgot because I use my magic keys. One lot is $10 per pip, right? Yeah, okay. See, my magic keys is ruining me. Okay, so one lot is $10 per pip. So 10 into 10, 10 into 10, we have 100. Okay, so that's $100. And of course, the with our account sizes, most likely not one lot, right? So um, most of us will have like 5 lots. Okay, 5 lots. So then we have 50 into 10. That's 500. So that's 500 in a day. Okay, so let's erase this, because like that's like lowest possible scenario, right? So you have 5 lots into 10, 500. Then let's assume that okay, a red news on the way, so it has a potential for it to go to 45, 90, 100 pips. So that's your weekly range expansion opportunity. As for example, Euro USD this week's big sell off. It's sold off for like about 100 pips. So you have 5 lots, 50 per pip into 100, right? 5 lots, 50 per pip into 100. You have $5,000. Just like that. Just in a day. In a day. Just one big sell off, you have $5,000. Simple as that. Okay? Uh, because you knew that, because using everything that we know, you know that okay, red news on the way, definitely that's going to be a big expansion. Which direction? Okay, it's this direction. It's going to go all the way down there, fine. And as it goes down, I'm going to add on to my position as long as it's premium, is as long as it's in premium. So you add another 5 lots. So then so maybe it already went down by 30 pips, so you have another 70 pips left, right? So we have 5,000 here, and you have 3,500 here. Then altogether you have 8,500. Okay, now you better go up, please. Okay, so you have 8,500 in a day, right? Simple as that. So that's why I stick to trades like that, the 10 pips to 20 pips. And of course, if there's any big expansion, I'll take trades like this. So whenever I take trades like this, it's because uh, I believe that it's gonna either fill in a void, it's gonna fill in a gap or whatnot, right? So yeah, I think Bitcoin was a wrong move. Yeah, it is what it is. Okay. All right, so that's basically why I go for the small targets. Okay, that's basically why I go for the small targets. So is everyone okay? wonder why it dropped though. Let's see. Not yet close to this point. Was it this? If it was this, I think it had every reason to drop. Yeah. Okay. Yeah. Yeah. My bad. Yeah. What was that? Yeah. It was because of this daily. This one. This wick over here. I remember, I refined it, but looks like due to this wick, it wasn't. A refinement wasn't required. So. Yeah. Okay, everyone. So that's all I have for you guys today. Simple, right? Market structure. So we have market price going in one direction, then we have price going in the other direction, and we understand how and when it makes a deeper retracement, when it does not, when it is not required for it to make a deeper retracement, and if it does make a deeper retracement, it's going to follow premium and discount ideas. Okay, so I'm going to stop recording now.